Indebted South Africans can breathe a sigh of relief. The Reserve Bank has announced a 25 basis point cut to the benchmark repo rate, lowering it to 7%. This takes the prime lending rate to 10.5%.
Argument that says that we could be cutting aggressively presupposes that we are targeting interest rates and not targeting the inflation. If you target the inflation rate, what you focus on is, as Muloko said earlier on, you are looking forward and say, here is our forecast for inflation and for growth. And based on that, you calibrate policy accordingly. You don't just say that, well, we must just cut aggressively. You will see in the statement that we had also put a new path for rates. And once again, understand that the quarterly projection model is just a guide, and that the stance of monetary policy changes from meeting to meeting in response to data. What we have demonstrated in putting what the QPM had put there says to you that if the Reserve Bank decides to focus on 3% rather than focusing on 5%, you potentially could have 5 cuts over the horizon. It doesn't say it's going to happen. It says potentially you could have that, provided the data support.
Government is offering the motor vehicle and agricultural sectors alternative markets and possible Treasury-backed tax incentives. That's part of a two-pronged contingency plan to keep production lines humming if the U.S. raises a 30% tariff wall on South African exports tomorrow. That's according to the Department of Trade, Industry and Competition. The ministry's spokesperson, Camille Ali, says alternative measures are needed to avert a crisis. That's as Washington is yet to respond to a remedial package that SA presented to the U.S. last month. British American Tobacco has reported an increase in its first half earnings. That's thanks to a recovery in its U.S. operations and growth in its smokeless business, and comes despite foreign exchange headwinds. Adjusted diluted earnings per share rose 1.7% at constant exchange rates. Looking ahead, the maker of Dunhill cigarettes has increased its share buyback program to £1.1 billion and reaffirmed its full-year targets, including top-end revenue growth, improved margins and continued deleveraging. AB InBev has posted lower beer volumes during the second quarter. That's as consumers in China and Brazil held back on chugging down. But the world's top brewer has beat profit estimates for the period. Its organic operating profit rose 6.5% in the 3 months to end June. That's ahead of the 5.7% expected by analysts. The acceleration is as a result of revenue growth and cost management that expanded margins. Anglo American has plunged further into the red. The global miner has posted a loss of close to $1.9 billion at the halfway stage of its financial year. That's as the firm continues with its restructuring efforts. CEO Duncan Wanblad says 2025 will be a year of transition for the group as it makes good progress towards a simplified portfolio. The company is looking to focus on copper and iron ore. The strategy has resulted in Anglo's demerger from Valterra Platinum and will see the group sell its steel-making coal and nickel business. It's also looking to separate itself from diamond miner De Beers. Mondi has delivered an 11% slump in interim headline earnings per share. That's despite a strong performance from the group's core packaging business as its uncoated fine paper segment struggled during the period. CEO Andrew King says the company delivered a solid performance in a challenging trading environment, noting that successful volume growth, price increases and disciplined cost control helped offset economic headwinds. ArcelorMittal South Africa has reported an interim loss. That's as sales declined and international and domestic steel markets remained under pressure. The group says it's been in discussions with government and other stakeholders about the collaborative interventions that are needed to address the decline in the strategic steel sector in South Africa. But despite some changes, constraints remain, and if there are no sustainable solutions, the wind down of AMSA's longs business will remain scheduled for the end of September. Woolworths has warned that earnings for the year to end June could fall by as much as 27%. The expected decline is largely due to the underperformance of its Australian Country Road Group and the effect of non-cash impairments. A silver lining in the retailer's trading update is that its South African food operations continue to deliver strong growth. Woolworths will open its books on the 3rd of September. The Constitutional Court has ruled in favour of Vodacom, sending the legal battle between the mobile operator and the Please Call Me investor, Nkosana Makate, back to the Supreme Court of Appeal. South Africa's apex court ruled that the Supreme Court failed in its duty of proper consideration by failing to consider critical evidence and accepting Makate's calculations without question. This continues the legal battle that has been dragging on for the past 17 years. Hammerson's going to market to fund a major expansion. The UK landlord plans to raise up to 10% of its share capital through an accelerated book build. The funds will help Hammerson take full control of Bullring and Grand Central shopping centres. The rest of the £319 million deal will be covered by existing cash and by pausing its share buyback. The move hands Hammerson the keys to one of the UK's top 5 retail destinations. In 2024 alone, Bullring welcomed 33 million visitors, with sales up 11%. The acquisition comes at a 4% discount to book value and is expected to boost earnings immediately.